Welcome to Slapnomics, the podcast where I help you find diamonds in the rough by using data in sports cards and TCG. Now, before we get kicked off, if you love Slapnomics and you're watching along on YouTube, please give a like to this video. It really helps out with the algorithm. Or if you're listening on Spotify or Apple Podcasts, make sure to head over and check out slapnomics.com. That's where I give you other episodes that I've done of this podcast earlier, as well as juicy tidbits in my weekly newsletter, Comped, and information about the sets like what I'm giving out today. So that being said, today, let me tell you about a structural event that people are treating like hype. Fanatics spent $500 million to acquire Topps. Then they went and they secured exclusive long-term licensing rights to the NBA, NFL, and MLB. All three gone from Panini in one sweep of the leg. Now, Topps Chrome basketball is back after a long absence, and the hobby is losing its mind about bounties, superfractors, and whether some specific rookie is going to be worth a car. I get it. The noise is so loud right now. But I want to talk about what actually happened here at a structural level. Because if you only see this as a hype event, then you're missing the more important story. And the more important story has real implications for the cards that you're holding, what you should be buying, and what's permanently changed about the supply side of the market. So let's start with some history. Topps Chrome basketball, baseball, and football debuted all in 1996. Now, the flagship part of the Topps Chrome set was the refractor. The technology had debuted with Topps Finest back in 1993 with their baseball set, and then was expanded in 94 into football and basketball. And this refractor is simply a premium version of the base card that catches light with a chromium finish and gives a halo effect of multiple colors. Before refractors, scarcity within the hobby was mostly accidental. See, they also didn't really have a lot of serial number things, which started really in the early 90s. Condition was the king qualifier. And then besides that, Topps had some fun, especially in the 70s and 80s, with printing errors, wrong birth dates, and off-center cuts. Scarcity was a byproduct, not a product choice. Now, in the 90s is when Topps changed this. They engineered scarcity directly into the product. And in doing so, they created a new mental model for how collectors assign value. The numbers are going to tell the story better than I can. If you look at the biggest card of all the Topps Chrome, the 2003 LeBron James rookie base, I'm going to tell you something that's going to blow your mind. See, last week we talked about Prism, and we talked about how Victor Wembanyama and Luka Doncic in their 2023 and 2018 sets absolutely dominated on the base levels. They were both above 4 million in the gem market cap, which is a number we arrived to by looking at the PSA 10 total population, how many they are graded at that level, multiplied by the last sale price. That gives us a number that if someone wanted to go and buy every single one of those cards, that's what they would have to pay. And that's a good way for us to compare against other players within the same sets. So now that number I just gave you was pretty huge for a base card with their PSA 10 pop. 4 million is a lot of money. But let's go back to 2003 Topps Chrome with LeBron James. Now, to say that this was a big card is an understatement, because the gem market cap for just the base card of the LeBron James 2003 is 17 million. LeBron's a pretty big deal. That single card controls over 97% of that gem market cap value if we look at it at a set level for 2003 Topps Chrome. And if you want a standard of comparison to know just how crazy that number is, that is 7.6 times larger than if you took all of the Topps Chrome sets for soccer and put them all together with their gem market caps. Of course, just being the base cards there. One basketball card, one player from one set that came out when the guy was 18 is worth more than the entire base graded gem market cap for all of soccer. We'll come back to why that gap matters, because it is very relevant. Now, what about the refractors? Because nowadays, when you look at refractors, they seem really common, and that's pretty key information. Because when you look back at the old refractors, they were really, really hard to get. To that point, comparing the base card to the refractor for LeBron James, it's 5.2 times the value of that base card, but it comes with 13 times less market depth. To put it in simpler terms, yeah, it's more expensive to buy a PSA 10 of those refractors for LeBron James 2003 Topps Chrome, but you could actually buy all of them 3 times more cheaply than if you want to buy all of his base PSA 10s. Kind of weird, right? And this is the classic liquidity versus premium trade-off that exists within asset classes. You either own the liquid asset at scale or the scarce asset at a discount, and you pick one based on what you're trying to accomplish. Really, it's a matter of market, because the market for base cards is a lot more affordable than the market for those refractors. Back to Topps. Topps held the position as the definitive top dog in the hobby until they lost the NBA license in 2010. That left a gap, and into that gap strode Panini. Soon after, in 2012, Panini introduced Prism. With it came their version of the refractor, the Silver Prism, and what happened next was fast. Prism didn't merely fill the gap that Topps left, they became the new standard themselves. When Panini locked up exclusive rights to the NFL and NBA, collectors had no real alternative. If you wanted an official licensed rookie card with real team logos and league marks for the next generation of stars, you were buying Prism. The market voted quickly, and the market voted decisively. Then, Panini did something that rewired the psychology of the entire hobby. They started multiplying the parallels. Now, Topps had started this in the early 2000s as well, but Panini took it to a different level. In 2013, Giannis Prism rookie came with 11 different parallel variations. That seemed like a lot at the time. By 2019, the Zion Williamson Prism rookie had 41 parallels. But still, I'm sure if you're familiar with modern sets, you're still shaking your head. Because by recent sets, you're looking at 80 plus variations: red, blue, snakeskin, tiger skin, rice patty, ice, every conceivable surface texture and color. Panini engineered a chase mechanism for every price point and demographic in the market. Next segment for Slapnomics: is it real or is it made up parallel? So with the parallel expansion, an interesting byproduct happened. See, up until 29, base Prism card and Silver Prism were essentially valued the same way in aggregate. Remember that gem market cap multiplies the total population times the last sale price. So the base card and the silver for Luka Doncic actually equaled out to both being about 4 million for that 2018 set, neck and neck. The market was almost treating them as two versions of the same thing. One was more rare, and it was made up for that with the higher price. But then something broke. See, by 2020, the silver was outpacing the base market cap by 3 times. By 2024, the Silver Prism was commanding 12 times the market cap of the base card for equivalent players. The base card basically got destroyed by Panini. This is not a gradual divergence, this is structural repricing. The market collectively decided that silver is the canonical version of a basketball card, and the base card serves a completely different and heavily discounted market. It's kind of like a B movie, really. The reason behind this shift is the grading explosion. Go pull the PSA population reports on the 2019 Zion Williamson base Prism. There are nearly 60,000 graded PSA copies. 60,000. Compare that to Giannis's 2013 base Prism, which has PSA 10 copies, only about 3,200 plus. Go back another year, and 2012 base cards for LeBron and Steph Curry are going to be under 900 apiece. Essentially what happened was the pandemic created a grading boom. People submitted every base card they opened, flooding the population and destroying the floor of base. Meanwhile, silver held on by its relative scarcity because collectors eventually got smarter and stopped wasting grading fees on base cards they knew were overproduced. In the early days of Prism, roughly 2012 through about 2015, the ratio of graded silvers to graded base cards was about 1 to 15 or 20. Silver was genuinely difficult to find. You opened a lot of packs to pull one. That ratio has since compressed to about 1 to 4. Compare that to Topps Chrome in their first sets, where it was 1 in every 12 packs, even 1 in every 24 packs for 1998 Chrome. So the silver is still more scarce than the base, but the gap is a fraction of what it used to be. What this means practically is that the base card is no longer a slightly worse version of the silver. It's a different asset entirely with a different buyer, a different use case, and dramatically different floor. So we just looked at a few cards as examples. Let's spend a minute on how sets are structured because this affects how you should think about what you're holding. I look at the 2012 basketball set, which the data reads as pretty democratically valued. There wasn't a massive rookie in that set for basketball. Checking out the silvers, LeBron James controls 21% of the set's silver market cap. Steph Curry is about 19.7%. Kobe Bryant is 16.8%. That's relatively flat in terms of distribution across top names. It's stable. It limits volatility, but it also limits upside a little bit because no single player can move the whole product. Contrast that with a modern set like 2023 Prism, where one transcendent rookie can control 80-90% of the entire product's value. The checklist is irrelevant except for that one chase card. If that player ascends, the whole product goes with him. If he disappoints or gets injured or ends up being the wrong bet, you're holding a portfolio that was basically concentrated in one single position you may not have known that you were taking. Think about it as an index fund versus a high-growth stock. The 2012 box is more like an index. The modern box is a speculative bet upon one unproven name. Neither is wrong, but they require very different frameworks for how you're sizing, holding, and exiting your position. Before I get back to Fanatics, I want to address the soccer number that sits in the back of my mind every time I look at this data. Lionel Messi's 2014 Prism Silver, graded PSA 10, arguably the greatest athlete alive at the height of his powers. It's a World Cup year. There's 39 graded copies in existence, and it trades roughly at $7,500, maybe $8,500 recent. Now, there's a really similar card in a really similar set. The first set of Prism Basketball has Steph Curry in it. Steph Curry has 37 graded copies, PSA 10, in that silver set. So the scarcity is similar, and most might contend that Lionel Messi is at a higher level within his sport than Steph Curry is within his. And that 2012 Steph Curry Silver Prism trades for about double the price of the Lionel Messi. Now, maybe you're looking at that and you're saying, well, of course, basketball is more popular than soccer. But I'm sure you also know that worldwide, that is simply not the case. In fact, not even close. So it's not a puzzle if you understand that the sports card market is almost entirely driven by United States collectors. Soccer cards are priced like a domestic niche product because the US collector base has historically treated them that way. The math of global fandom, 3 billion soccer fans versus maybe 300 million American football fans, has not translated into card market pricing. Not yet. The gap between global fandom and American fandom is really the World Cup thesis in its most original, simplest form. If hosting the tournament on North American soil creates durable new demand from U.S. collectors, that mispricing is going to correct. But here's the honest version of that thesis. Correction requires structural demand, not event-driven demand. A price spike during the World Cup that reverses when the tournament ends is not a market correction. It's simply a hype cycle that briefly visited a discount asset and then left. The investors who come out ahead on this thesis are the ones who identified the gap 2 or 3 years before the event, bought into genuine scarcity on proven players, and are now watching demand build underneath that position. The people who buy in June 2026 because they saw a meme about Mbappe at a Houston party are the exit liquidity for that trade. Now let's go back to Fanatics for a little bit. When Fanatics bought Topps for $500 million and secured those exclusive licensing rights, what this means in practice is that Panini can no longer officially produce licensed basketball and football cards with team logos and league marks. Their new unlicensed product can show the player, but not in a Lakers jersey, not with an NFL shield. Historically, unlicensed cards carry very little value. The market wants authenticity. It wants the official connection to the team and to the league. That's been through pretty much every era of the hobby. Here's the tension, though. The fully licensed Panini era is now a closed chapter. From 2012 to 2024, Panini produced officially licensed Prism cards for an entire generation of stars. Patrick Mahomes, Luka Doncic, Zion Williamson, Jason Tatum. Those official Panini Prism rookies will never be made again. It has permanently halted. That's a supply lock. And supply locks, if demand for those players holds or grows, are historically the catalyst for appreciation in alternative assets. The parallel's not perfect, but think about what happens to a discontinued sneaker or vintage wine when the product confirms the run is over forever. The market reprices the existing inventory, not immediately, not uniformly, but over time as buyers begin to understand what they can find is all there will ever be. For the top tier Panini Prism players who had cards that went on to become iconic, this matters. The supply structure gets permanently favorable. For those base cards of players who never broke through, the closed chapter doesn't change anything. Overpriced assets don't become scarce because a manufacturer just stopped. So what does the data actually support? Topps Chrome Basketball is officially back after a long hiatus, and people are going absolutely bananas for it. There's already bounties being placed on super refractors. The hype is real, but I want to be honest about a couple things here. First, some of what we're seeing is legitimate scarcity pricing on genuinely rare assets. A true one-of-one card of an elite player has supply constraints that are real. They're not manufactured. When the market prices those assets aggressively, that's the market doing what markets do when supply is finite and demand is institutional. Second, the retail experience for the average collector is not matching the hype narrative. $50 for a blaster box at Target, $85 for a mega box, hit rates that produce either a significant card or $5 worth of base cards with nothing in between. That boom or bust structure of modern wax is not new, but the pricing has gotten more and more aggressive at the exact moment when retail collectors have the least realistic shot at pulling cards driving the headlines. That frustration that you might already be hearing in the collector community is worth paying attention to, not because it kills demand at the high end, but because it signals the bottom of the market is being asked to subsidize the top. That has an eventual ceiling, and it comes quick. The collector who spends $85 on a mega box and pulls nothing of value several times in a row does not become a loyal hobby participant. He becomes someone who used to collect cards. And every one of those past collectors is a demand unit that doesn't re-enter the secondary market. Pulling the threads together here, a few things become really clear. If you're holding good Panini Prism cards of legitimate stars, the supply structure just got more favorable. The combination of a closed chapter, no new production, and a rising tide of institutional attention on the hobby is a real tailwind. The caveat is you need a player with durable legacy, not just current relevance. And these cards might go down in the short term as people start focusing more on Topps Chrome, but I believe when people truly understand that the supply is capped on Prism, they will circle back around to it. So if you're chasing the new Topps Chrome products on those retail box purchases, just be honest with yourself about what your expected value is. The cards worth owning are going to be priced efficiently very quickly. The secondary market finds price fast on scarce high-profile assets. You're not going to be finding a $50,000 card for $85. To all my guys positioned in soccer cards ahead of 2026 World Cup, the structural argument is still intact. The cross-sport valuation gap between Messi and Curry I described earlier is not normal. It shouldn't be trading at half or a third of the market value. It simply reflects a market that has not yet caught up with global demand dynamics. The World Cup is the nearest catalyst, but the thesis is bigger than one tournament. Infrastructure has been built for soccer in this country over the past 30 years that did not exist in 1994. That is not going to go away after June 2026. And if you're trying to understand this licensing shift as a whole, think about it as a supply control event first and a nostalgia event second. Most of the hobby is processing it through a brand loyalty lens. The Chrome logo is returning, the Prism era ends. That's the surface layer of the thing. But the deeper layer is that now one company controls the licensing right to produce official cards for the three biggest American sports leagues. And this will result in a structural shift for how value will be distributed in this market for the next decade. Understanding the supply structure is always the first job. Everything else is downstream from that. One little bonus tidbit that I want to give you guys before I end this episode is some of the pop counts for those early Topps Chrome releases. Topps Chrome came out in 1996 for baseball, football, and basketball. And here's a few of the 1996 Topps Chrome refractor pop counts for some of the big stars. The most famous one in 1996 was Kobe Bryant. And he has a massive gem market cap for the time at over $6 million for his refractors. You know how many PSA 10s he has? 63. And you compare that against the 1996 top chrome refractor population for football, and it looks like a whole flood of cards because all of those are in the single digits. If you want the biggest one in the baseball set for 96, Derek Jeter only has 10 PSA 10 refractors. I highly encourage you to look at the pop counts for all of the football for Topps Chrome in the 90s because they're so incredibly low when you look at it from a gem market cap lens. Here's an example. Peyton Manning in his 1998 Topps Chrome rookie refractor. If you were to buy all of the PSA 10s of that refractor, it would cost you a cool $567,000. Sure, $567,000 is a lot of money, but remember that Kobe market cap for his refractors was over $6 million. So Kobe's pool is 12 times Peyton Manning's pool. And it's not just the 90s Topps Chrome. I found this pattern all throughout football. Here's another example. 2005 Topps Chrome refractor for Aaron Rodgers, my guy. There's only 13 PSA 10 refractors for Aaron Rodgers' rookie card for Topps Chrome. If you want to buy all of these, it would cost you $100,000. $100,000 and you get all the refractors. Blows my mind, man. All of these Topps Chromes are so low, the gem market caps, which give you the ability to compare against each other within the set and equalize against that, are all available on Slapnomics.com to my investor tier. Go to Slapnomics.com, start poking around in there. This data will empower you to find those diamonds in the rough that I always talk about. And that's how you can build long-term assets for the future. I hope that this episode has been insightful for you. If it has, be sure to tell a friend, leave a comment for me on whatever social media platform you're engaged with me on. Thank you so much for being here. As always, keep building, and I will talk to you later.